Ladies and gentlemen, Greg McCloskey from ForexLive.com. This is a Forex quick look. I'm going to take a look at the Euro versus US dollar. Today's date, December 6th, 2024. Let's get started. And not only is Friday, but we're also going to be leading into the U.S. jobs report at 8:30 tomorrow morning. That's going to be the key event that's going to drive currency pairs like the Euro versus U.S. dollar. If it's weaker than expected, we might expect the Euro versus U.S. dollar to move higher. If it's stronger than expected, we might expect that currency pair to move back to the downside after today's run up to the upside off of the weaker initial jobs claim. So technically speaking, what levels are going to be key for traders? Are going to put a red box here around where the price action has been mostly trading. And if you go back in time and take a look at just this yellow area up through here, this was all started way back when here, where the market found some support through here and then broke below that level and used that level as resistance. We moved lower and then we came back up to the level here and here and here and here and here and here and here. You get the idea. And it wasn't a week ago, Friday, that the price came up to that level and once again found willing sellers pushed to the downside. That move to the downside moved down to this lower swing area right through here, where we had a number of different swing lows forming this floor right through here. Yes, it did move below that floor right through here, extending to the extreme down at 1.0332 for the month of November, then rotated back to the upside, gapped above this, back into the red box, and then found support here, here, and here before moving to the upside and going back to the high of the extreme. So we have the high extreme, we have the low extreme, and here we are right now here up near the 1.0587 level, and we're just below the low of this yellow area up at the top, signifying the high of the trading range going back to November 11th. This high area comes between 1.0592 and 1.0609, and if the bias is going to increase to the upside through, let's say, a stronger U.S. jobs report, we would expect the price to move up toward the 50% retracement of this move down from the November high to the November low. If we get above that level, then we look toward the 200 bar moving average on the 4-hour chart at 1.0661. That level, that moving average, I should say, has not been broken since October 1. Believe me, it goes way back in time back here. So October 1 was over 2 months ago that the price last traded above that 200 bar moving average. And that's going to be a key level that the price needs to get to and through if the buyers are to take more control. Conversely, if the price is, or if the data is weaker, or the market's already priced in a number like 200,000, which they're expecting, then we could see a rotation back to the downside. The key levels on the downside would be to break first below the 38.2% retracement. That's of the November trading range. That level comes in at 1.05628. And then we're going to start to look toward this cluster of moving averages. This cluster of moving averages is defined by the 100 bar moving average on the 4-hour chart, the 200-hour moving average. That's a green line. You can barely see it here, but this line right here. And then the 100-hour moving average. The importance of the 100-hour moving averages is not only the low of those moving averages, but it also acted as resistance through here. You can see 1, 2, 3, 4 different times the price used that level as resistance through here before breaking above it and trading on Wednesday and trading above and below it and trading here on Thursday. The price ended up basing against the 100-hour moving average and for that part, and in addition, the 200-hour moving average before moving to the upside. So that level, this area right through here near the 1.05, looks like 1.8-ish type level, is going to be a key support. If we break below that level, it increases bearish bias, and we start to look back down toward our low extreme down through here for the Euro versus US dollar. So the buyers are trying to push to the upside, trying to push to and through the topside extreme. If they can get above that, that's more bullish. Alternatively, if they can't, watch the 1.05628 and then that 100-hour moving average near 1.0518 on the downside or thereabouts. Break below that level and we head back down toward the lows. My name is Greg McCloskey. Good fortune with your trading. Bye-bye now.